What's up guys, Vladimir here from Home Trader Club. Welcome to another weekly Forex forecast. A lot of fantastic opportunities ahead of us for the coming week or weeks, but it's very important to mention that we enter December. As we know, that comes from one side with the expected Santa Claus rallies on the markets, however also dropping slowly but steadily volatility during the months. Keep that in mind when you are looking for your opportunities. And before the charts, I want to take the opportunity and as always state big thanks and thumbs up to EightCap broker for their support in our community and to enjoy all the special offers we have as partnership with EightCap broker. Please refer to the link below this video in the description. The first one for today, the euro dollar, and there is a double sword opportunity on the euro dollar. Quick analysis behind what do we have for the long term. I think that the bullish run is not over and the euro is expected eventually to make this rally, maybe all the way up to the 122, maybe even beyond, until the weekly cycle will actually complete itself. That is for the longer run. Okay? But on the shorter run, if we drop to the daily chart, the way it looks at the moment after the three bullish waves we've had on the daily chart, the market usually goes into corrective phases, and that means either A, B, C, D or a range. So this is a very possible scenario as A, B, C, D, but on the other hand, the pair could simply continue, make the move inside the range prior the breakout and to continue. So with that logic in mind, there are two trading opportunities the way I would be looking to trade now on the short term. So if we go to the 4-hour chart, clear, beautiful price structure, three lower highs, lower lows, and right now it looks like the euro could try to make ABCD by its own here before the push down, or complete that as a range and make this push down to complete the ABCD correction we were expecting to see on the daily chart. For that to happen, pay attention to these key levels we have on the euro dollar. These two peaks that we have here, basically around the 116.50 up to 117, up through, I would say, the peak around the 117.50 up to 117.80. These are the two key levels for the euro dollar, where if managed to hold, I would be expecting the price to push to the downside. And on the other hand, if the euro managed to restructure the bullish momentum by making sequence of higher highs, higher lows on the daily chart and place itself above the volume profile based balance zone, then buy the dips would become the trading plan. So to summarize that on the short term, as long as these resistances around the 116.50 up to 117.50, 117.80 zone, we also cannot ignore the 117 round number peak, which is a classical supply area. If these levels manage to hold, pay attention to the euro dollar bearish sign. For example, the resistance that holds but bearish divergence form here on the MACD pushing the peaks to the downside, then look for the sell opportunities. The next one for today, the pound yen, a pair we did not discuss for a long time, but also starts to be super interesting. The way I see that, the pound yen is about to complete this triple wave rally with a monthly bearish divergence. Now I don't say it happens now, it might take a couple of months until it actually peaks but I believe this peak is forming, and with the recent or the last expected push before the move down, provides us the trading opportunities. Take a look where the pound yen is at the moment. Key supply levels. These peaks, extremely important levels on the monthly chart, and I believe that inside this zone, the pound yen should form a long-term opportunity. If we go down to the weekly chart, then on the weekly chart we can see that the pair is forming its divergence. Didn't yet complete. Of course, this peak is yet to form, which makes me think that the pound yen is still under bullish pressure, and these waves should form something like that before the drop. With that idea in mind, if we go to the lower time frames on a daily chart, at the moment there is a sequence of highs and lows, and there is no bearish divergence on the moving average of the MACD, which makes me think it's not over this bullish run, and after it retraces, pound yen should provide some buys. So if we go to the 4-hour chart, on the 4-hour chart we do have beautiful sequence of higher highs, higher lows, and I would be looking for the buy opportunities after the retraces. And for the key levels to pay attention to, we have the lows here with the broken resistance that now becomes support surrounding the 205, slightly above, slightly below. We also need to pay attention to the volume profile based zone here, balance area, and the daily key level. This is around the 205.50, and that could drop as low as 205.50 zone, and as long as these levels hold, the plan for me is looking for buy these retraces on the short term. So about the pound yen quick summary, I do not think that the long term is ready for the reversal, and the way it looks right now, the momentum here is still bullish, and after making this higher highs, higher low structure, I believe that the retraces down should provide further buy opportunities, and I believe this pair has more to offer until it reaches the key levels we saw from the weekly and the monthly chart. Next one is gold, and while the silver already made all-time highs this week, the gold is still slightly behind, which means there are two scenarios on the gold to follow. First of all, I want to remind you once again, guys, that we are on the gold at the very peak on the last several months with these overbought conditions, which means the current peaks could start to create fake peaks before significant drops will take place. I'm not trying to predict anything like that. I'm saying, just technically speaking, these levels are really high, and with high probability that current peaks would actually be fake peaks. So the weekly chart also has overbought conditions. The interesting part that starts to build up here is on a daily chart and the lower time frames, where the daily chart, let's hide the levels here, where the daily chart made the move down, but now is forming some sort of two waves retrace. Now that has two scenarios. The ideal case scenario, this will continue the rally, complete another peak, and then simply look for this divergence to go and form, and from there look for the sell opportunities. Scenario number two, and possible scenario, is that we actually see that as a range, a divergence complete here, and then boom, it breaks down below the range and below the recent low, which if happens, and I would repeat, if happens in that format, then look for the pullbacks, and then I believe gold could go all the way down to 3,400. I know this number sounds impossible at the moment, but this is a definitely possible scenario if the waves shift from the current structure to make the new lows and make the breakout and get the momentum, that could be a really great opportunity. So for that to happen on the 4-hour chart, watch out for this possible range. If it managed to break it down, both the range and the low, look to sell these rallies. If the scenario on the gold does not break to the downside, let the waves complete the rally. Look for the daily bearish divergence to form. New peak, ideally a fake high, which means break above the last swing high and close below. That should be a great sign that the buyers are losing their grip and sellers will step in. And the final one, Bitcoin. Lots of things were discussed about the Bitcoin. What is next? So I would make it very straightforward and save you time. I do not think that the bearish move is over. I do think that these rallies are temporary before another push to the downside. With this idea in mind, on the daily chart, as it forms the lower highs, lower lows, very interesting thing happens here with the bounce from RSI over sold condition, and I believe this rally is temporary before the sell-off. What to pay attention to? Broken support becomes a resistance. Last high here and here act as a supply level. Beautiful zones. If the Bitcoin managed to get inside there, this would be the zone to look for the next sell. Also pay attention to the high probability that this rally would create lower highs on the chart versus higher highs on the MACD histogram, which means bearish hidden divergence, and then the push down. On the shorter term though, there is a possibility to see this push taking place before the sell off, and for that pay attention to the small waves we have on the 4-hour chart, retraces back to broken resistance that acts support, and the last low which acts as demand. As long as they hold, look for them as a possibility to push the Bitcoin back to the 95,000, maybe all the way to 98,000, with the higher range of possibility around the 106,000. And as that is expected to complete there, from there I would be looking to sell. That's it for this video. As always, I hope you find value in these trading opportunities, and if you do, please don't forget to hit this like button. If you are new to our channel, please consider to subscribe with the subscribe button below this video. I also want to take the opportunity and once again to invite you to our trading family, the Home Trader Club. Enjoy the access to all of our courses, real-time education and real-time trading opportunities published for you in our channels. For any questions, don't hesitate to ask in the comments. Thanks for watching, and I wish you a wonderful week and new months, last months for 2025 ahead. Thanks for your time, best to you and yours, and I'll see you soon with more good trading. Bye for now.